If you've started a business and you're running it without paying yourself, or you're paying yourself and you have no idea how to pay yourself, this video is going to be for you, because I'm going to dive into exactly, what you need to be paying yourself if you're this certain entity or if you're making this amount of money. So let's dive in. So the first thing we need to understand is there's going to be two different entity types that I'm going to go over, at least. And it's the LLC and the S corp. So you need to understand that paying yourself out in an LLC doesn't really matter how you do it. You can just distribute money from your bank account to yourself. But how much of that do you do that? Now, the biggest thing here is you really need to get your books in order. You need to have bookkeeping like in place somehow, some way, either with an Excel spreadsheet or with more advanced accounting softwares like QuickBooks or something. Because you're not going to be able, if you don't have those things, and you pay yourself, it's gonna be kind of guessing. You're gonna be guessing about the amount that you need to pay yourself. Because think about it. If you want to grow the business, you can't pull out every single penny and pay yourself with that money. You have to reinvest something into it. Yes, you can pay yourself something, but you have to understand that the more percentage of the profits that you pay yourself, the less your business grows. The more you reinvest the profits, the faster your business grows. So you've got to really understand that. If you want to grow your business more, maybe only take 10 to 20% of the profits and pay yourself with that, but you need to have bookkeeping in place so you understand, so you know exactly where it is that you like how much money you are able to pay yourself. If it is actually 10% or if it is 20%, or you'll be guessing if you don't have that in place. So that's the main thing with LLCs, is just figure out a percentage that you want to pay yourself and the other percentage that you want to grow the business. And that's how you pay yourself. And it's really simple. Like I said before, it's just taking the money out of your business bank account and distributing it to your personal. And that's how you pay yourself. Just understand that you need to know the difference between growing a business and not. So understand that the bigger percentage that you pull out from your business is going to be a slower percentage of growth that goes into the business, if that makes sense. The other entity that you're going to be involved in, most likely, at least for small business owners, is S corp. So S corp is an LLC. They're just being taxed as an S corp. But there's a big difference. So the reason why a lot of people want to be taxed as an S corp, because at a certain threshold of income, usually around the $50,000 mark, you're going to be seeing better tax advantage by being taxed as an S corp, because you're going to be avoiding what's called self-employment taxes for the most part, for at least the whole thing. So like with an LLC, you're going to be charged 15.3% in self-employment taxes on all of the income that you make. Now, whenever you get taxed as an S corp, that changes. You get taxed 15.3% on only the money that you get pulled out, that you get distributed to you, or as in other words, the payroll that pays you. You are pretty much going to be getting paid as a W-2 employee. But your business still needs to pay payroll taxes. So it's going to be a reduction. And then also you don't want to do it on your own. So you're going to have to hire an accountant, and you're going to have to pay payroll software like Gusto, and I think QuickBooks has one too. You're going to have to pay these software companies payroll companies that are software. They're going to have to pay them in order to, you pay yourself in payroll. So you have to be able to do that. That's the biggest difference between LLC. Doesn't really matter how you pay yourself. S corp, you have to be a W-2 employee inside of your business. So you have to pay yourself on payroll. That being said, now comes the hard part. The weird part that is the IRS doesn't tell you an exact percentage. They tell you a reasonable salary. So what you have to do is you have to take what you do for the business. So if you're the owner and you do everything, it's kind of hard. It's kind of hard to narrow it down. But if you're one of the employees and you do a specific role, like maybe you just do the bookkeeping or something, well, it's fairly easy to look up how much a company pays a bookkeeper, But when it comes to the other deal, it's kind of hard to understand what a reasonable salary is. So you can talk to a CPA, accountant that you're gonna hire anyways. Kind of ask them. Make sure they're not being super conservative, because you really don't have to be paying yourself a ton. But a lot of people are going to be nervous about it, because they're going to think, or a lot of CPAs at least, are going to be nervous about it, telling you to pay yourself, a larger amount, or I'm sorry, a smaller amount, just because they're worried about the IRS getting mad. But it's really rare that the IRS gets mad and comes after people because for this reason. As long as they're paying them something, and I've heard a lot of people taking advantage of this situation, and really paying themselves really small amount compared to what a reasonable salary would be for somebody else in working the business as a W-2 employee. But I would still talk to a CPA, make sure that, what you're paying yourself isn't going to get you in trouble and stuff. But, just kind of look it up and understand what the differences are. But that's how you're going to pay yourself as an S corp. But you can also pay yourself with distributions. This is going to be huge, because distributions are a lot more tax advantaged. So you pay yourself your reasonable salary, you pay, all your regular deals with that, and then you also can pay yourself with distributions. This is, the benefits of having an S corp is pretty much you're saving on taxes. So those are the two different methods of how to pay yourselves if you're an LLC, or if you're an LLC taxed as an S corp. You definitely want to figure this out. But the biggest issue is your bookkeeping. You have to have your bookkeeping on point. If you don't, you're going to be doing this blind. And it's not okay to do that, because, you could pay yourself this way for a whole year, 2 years, 3 years. But then at the end of those years, you might look back and realize, like, oh man, I was hemorrhaging money that entire time. Like, it's gonna hurt you for a lot longer if you don't grasp a hold of it and understand your numbers to a T. Because you got to understand what's coming in and what's going out in order to be able to understand how much you can comfortably pay yourself. If you are paying yourself a little more than you should, then at least you know it, or a little less than you should, at least you know it. Driving blind is not a suggested way to do it. So, thanks for watching. Subscribe to the channel and watch the next video right here.